Are you self-employed and you've heard of and thought about an S corporation and wonder if you're ready to make the switch for your business to be an S corporation? Well, before you do it, I think there's 5 things that I'm going to go over in this video that you need to have in place before making the switch from self-employed to S corporation. Now, these 5 things cover areas to make sure, number 1, you have enough income and you're paying enough taxes in that you get tax savings out, making it worth converting to the S corporation. Number 2, you actually have the minimum requirements to be an S corporation. And number 3, your bookkeeping is leveled up to the minimum amount you need to be an S corporation, because the S corporation files a separate tax return. And that separate tax return is the S corporation tax return. And as the name sounds, it is a variation of the corporate tax return, the same tax return filed by the big companies, the Apples, the Amazons of the world. This is just a variation from it. And that variation does, in fact, require a higher bar than when you're filing as self-employed. You need things like an income statement and a balance sheet, for instance, where as a self-employed, you just need income and your expenses. So there's a higher bar to go over. But if you implement these 5 things in your business, you're going to be set when it makes sense for you to be an S corporation. Just because you get these 5 things doesn't mean you're ready for the S corporation. But if you don't have these 5 things, you're probably not ready to be an S corporation. All right, well, let's dig in. So the first one, let's talk about the financial aspect of it and making sure you're generating enough income to make it worthwhile to be an S corporation. A lot of people out there have their threshold. They talk about income thresholds. I like to look at the revenue side of things because it's much easier for you to know when your revenue is a certain level as opposed to your net income. And so your your revenue, I should say, needs to be, I think, above the $100,000 mark. That's when it really makes sense to start having a discussion about the S corporation. Because by the time we add in your expenses, that net profit is going to be in a range where financially it's going to start making sense to be there. And so you want to be at least at that 100,000. It's just a nice round threshold number. It's not an exact number by sure. You could be a little bit lower. You may need to be a little bit higher. Depends on your expenses, your business, a lot of factors in there, but it's a nice starting point to kind of look at. If you're not there, then I think you need to focus more on generating your income and bringing your income up to that level before we start worrying about implementing and moving over to the S corporation and the S corporate's tax strategy. So that's the first bar we want to hurdle over. The second one is making sure you meet the minimum requirements, because when you're self-employed and you're running your business under your personal name, you cannot actually be an S corporation. You need to have a business entity, and the LLC is the most common legal entity for self-employed moving to the S corporation. That's because it offers the flexibility of being self-employed or being S corporation. You get to make that choice when it makes sense for you. So the LLC is really the business entity of choice, and you have to have that set up before you can move into the S corporation. And you can't be an S corporation for any date before it. So if you want to go back to the beginning of the year, you would have had to have that LLC set up at the beginning of the year. So you want to get that LLC set up and in place as early as possible. If the financial cost of setting it up and or keeping that LLC open until you become an S corporation, if that is prohibiting you from doing that because that's just too big of an expense, then that might be an indication that you're not financially ready to make the leap to the S corporation. So either way, you want to have that set up at the beginning of the year before you can even be an S corporation. So that knocks out the kind of the financial, making sure you have enough money, and making sure, number 2, you meet the bare minimum requirement for the S corporation. The next three are really about making sure you've leveled up and you're organized enough to take on the additional responsibilities of being the S corporation, because like I said, it is a higher bar. So number one is going to be pretty simply a business bank account and the name of that before mentioned LLC. You need to get a separate business bank account in the name of the LLC, and you need to actually use it for all your income and expenses. Basically, you're going to see the next three, you're going to want to treat your business like an actual business. So you want all the income going through that business bank account, and you want all your expenses being paid out of the business bank account. And you don't want to be spending personal expenses out of the business bank account. You just want to take the money out as owner distribution or payroll out of the company, then put it in your personal bank account, and that's where you spend your personal money. We don't want to commingle. If you're still commingling your funds, meaning you're mixing your business in with your personal funds, then you're not organized enough, in my opinion, to really take full advantage of the S corporation. So you need to work on separating those out and being very diligent about only using that business bank account for the business purposes. Number two goes along with that pretty well, and that is you need to have a bookkeeping setup in place. And what does that mean? That probably means using an online accounting system like QuickBooks Online or something else. And you're not just running off the bank account and the bank statements trying to come up with your income and expenses. You need to have an actual accounting software in place. And it's for a couple reasons. One, it's going to be able to generate that income statement and that balance sheet that we talked about needing earlier in the video. You need that balance sheet to properly prepare the S Corp tax return, and without an accounting software, you're probably not getting that balance sheet. Now, the balance sheet may just be your bank account, bank balance, and your equity. You may not have any other items on that balance sheet, but you still need the accounting software, because the other thing it helps with is it does happen from time to time. You want to be diligent about running everything through your bank account, the business bank account that is, but sometimes things happen, or you're paying maybe your home internet expense, for instance, you're paying with your personal expense, but part or some of that you want to put over to the business. You can do that much easier with an accounting software. So there's just things you can do with the accounting software. And again, I go back to if that monthly subscription fee, or if paying somebody to maintain the accounting because you can't do it yourself, if that's going to be cost prohibitive to you and your business, you can't afford to pay that monthly subscription, or you can't afford a bookkeeper to help you maintain those books if you need that and you can't do it yourself, then again, you're probably not at a level you need an S corporation. You need to have good bookkeeping in place to properly prepare that S Corp tax return, because that minimum bar requires at least that balance sheet and income statement. So implement that, get that in place, make sure if you can't maintain it yourself, you're paying somebody to help you maintain it to some degree, whether they're doing all of it or just kind of helping you reconcile and clean it up when needed. Whatever you need to do, you need to have good accounting software in place to meet the requirements for the S corporation. And then the last thing, number 5, that you need to have in place before moving over to the S corporation is going to be actually having a working relationship set up with a CPA, because you're going to need that relationship, because number 1, they're going to advise you as to when it actually makes sense for you to be an S corporation. Like I said, if you have all these things, does not mean that you need, does not mean that you're ready for the S corporation. These are just things you need before going over there. So once you get that working relationship with the CPA, they can advise you when it makes sense to do that. And additionally, what's more important really is the fact that once you become an S corporation, there are additional requirements that you need, not only the separate tax return, but things like payroll for yourself and other administrative things that you're going to have that you need to make sure you're on top of. And that CPA is going to help advise you on how to run payroll for yourself. There's plenty of ways to do it, and every CPA is going to be very different on how they work payroll for you, not only how you file the payroll, but how much of your income needs to be allocated to payroll as opposed to income. So a lot of decisions there, and it's best to have that relationship up front before you make the switch over to the S Corporation. They're also going to probably make that conversion for you. There's an election form to file, and they'll help you file it so that you can then start to be taxed as an S Corporation. All right, I hope that's helpful. Those are the 5 things I want all my clients to have in place before I think they're ready for an S Corporation. Can you do it without those? Yes, but it has not worked out very well for those that didn't have all those things in place. It's much smoother and easier once you get all those in place, and you actually can then take benefit from being an S Corporation, and you're not wasting a lot of time trying to catch up on these things. You're organized from the beginning. If you have any questions about any of these things, please feel free to leave a comment below. If you got some value out of this and you're still watching, I'd appreciate that thumbs up button. And if you want more content like this, go ahead and subscribe. Thanks for watching.